Welcome to the Market Minute. In this one, covering some of the biggest stories breaking over the last 24 hours. And of course, starting off with the price action today, we're actually seeing a little bit of green, and it is of course FOMC day, but as well as that, big earnings days as well from Mag 7 companies. We've got Amazon, Microsoft, Meta, and Google with earnings later today. So quite a big one. Now just looking at price action, we've got Bitcoin 77.2K, up 0.3%, ETH 23.26. We've got Sol at 84.88 and Hyperliquid at $40, 68 cents. Now over to chart of the day from Don Alt, one of the OGs on crypto Twitter. He's posted a BTC chart with the following: seems kind of all right to me, not bad but not great. Decent reaction to support having been hit. Resistance kind of met from here. Might just have to give it some time. So having looked through some of his tweets, he's generally constructive on Bitcoin, but just thinks it takes some time before it catches a proper break higher. But let's get into the first story for today. Pump Fund has announced a tokenomics pivot, but is this a downgrade for holders? So Pump, they've announced their biggest tokenomics change in their history, and the market's reaction tells us what we need to know. Yesterday afternoon, the team confirmed two things for us with this post. First, they have burned the entire stack of previously bought back Pump tokens, around $370 million worth. That's around 36% of circulating supply. So a huge token burn from Pump. Second, going forward, they're committing 50% of platform revenue to a programmatic buyback and burn for the next year, and that is locked into an irreversible smart contract. So sounds bullish, but here's the catch. For the past 9 months, 100% of revenue went to buybacks. The co-founder Alon confirmed this himself, but the new policy cuts that to just 50%. So the other half now goes to operations and strategic investments. So the headline change is simple: half as much buying pressure on Pump going forwards. Token holders ended up around 3% up on the day after spiking 10% for a short amount of time, but it then gave back most of its gains. So Pump clearly in a downtrend overall, sitting at nearly 0.008 on the USD chart. Now cutting the buyback intensity in half in this tape, probably the last thing this chart needs. Also, side note, there is no announcement of an airdrop, and it seems those funds have just been burned. So a lot of the community had been pricing in some form of distribution to holders, and the announcement explicitly addressed buybacks and burns instead. So that's the second leg of disappointment. And the bigger context, Pump unlocks don't begin until July. So the supply overhang is still entirely ahead, just a few months out now. So the team is now telling the market they'll defend it with half the firepower they were using before, while a major unlock approaches. The burns are a real commitment, sure, but locked at a lower rate now. 50% of a declining revenue number is a lot less. For holders watching with the chart bleeding out and the unlock cliff approaching, this is a downgrade dressed up as a roadmap item. Markets.xyz by Kinetic over on Hyperliquid has just put up $200,000 onto the table to drive adoption on its new mobile app. The program, it covers free USDH to USDC swaps with all slippage and fees reimbursed in partnership with native markets. They've got weekly trading competitions, paying out by P&L and XP earned, and prizes, they range from custom Rolexes to even FIFA World Cup tickets. The product itself though is more interesting than the giveaways. One deposit, one app, 50 times leverage, and access to perpetual markets across stocks, indices, commodities, and currencies. The app auto-detects whether you're holding USDC or USDH and routes to the correct collateral with no manual steps. That's the actual edge, friction removal, not the merch. Kinetic's bet here is that mobile is where the next wave of perps traders comes from, and incentives plus a seamless onboarding is how you win them over. Hyperliquid CEO Jeff said recently there is a billion-dollar opportunity to build a mobile app for non-crypto users. The two keys are seamless fiat onboarding and a mobile UX that non-crypto users love. On markets.xyz, you have no idea you're even using crypto rails, and to boot, check out this retail-friendly advert they've created. Feels like something's really cooking over there. We happen to be at the same
Yo, dude, are you seeing this shit?
Looks like crude oil is absolutely soaring.
Yeah, it's this thing called Hyperliquid. It's not for everyone.
I mean, no other president is doing shit like this.
What the fuck? Whatever I say, do the opposite.
I'm going max long on this, bro.
Call me if you can.
Son, dinner is ready.
Really not a good time right now, Mum.
What's up, big dog? George, I knew you'd call.
Yo, so I'm thinking max long on oil, but we gotta make it happen now!
Michael Saylor has given away the game here and told us the exact strategy for Bitcoin.
You know, and what's the end game? The end game isn't that complicated. It's give a bank account, an 8 to 10% a year yielding high yield digital bank account to 1 billion people, drive Bitcoin to $10 million a coin, and make Bitcoin a $200 trillion network.
So as we know, Stretch is their preferred dividend instruments and has been printing BTC for them and giving holders 11.5% in yield. He now says Stretch has grown into a Bitcoin accumulation engine and has become the largest preferred stock in the world within just 8 months. They've also just proposed the bi-monthly payout for Stretch, and this has now gone to a vote. So Saylor is definitely cooking. His CEO, Phong Le, has also stated over at the Bitcoin 2026 conference, if we could take just 1% of the $300 trillion credit universe, that'll triple the AUM of Bitcoin. So this means they want to expand things by $3 trillion. And on this projected basis, take Bitcoin to at least 230K. We can see from the stats here, Stretch, it raised 8.5 billion in just 9 months. And this is at a pace 5.5x faster than Strategy accumulated its first 8.5 billion. Just listen to what Saylor had to say about Stretch.
The instrument grew to be the largest preferred stock in the world within 8 months. It's now 8.5 billion. I'm showing you the 10 largest preferred stocks. If you read the chart, what you'll see is that Stretch is a simple thing to remember, STRC. The other stocks are C/PN or POW.PR.E. If you went and searched for these, you wouldn't find half of them. Like, you can't even Google them hardly. How do you buy them and sell them if you can't find them? Some of them, the ones that say OTC, it's illegal for you to buy them.
As you can see there, he has been on fine form. Quick market snapshot over the last 24 hours for you. So what has been going on? Well, the US to put Donald Trump's face on passports going forward. That will annoy very many people. Strategy proposes changing the STRC dividend to bi-monthly. Shareholder vote is live. CFTC sues the state of Wisconsin for encroaching on its exclusive federal authority over prediction markets. President Trump has instructed aides to prepare for an extended blockade of Iran to pressure them into a nuclear deal. Sam Bankman-Fried, he's been in the news yet again. His motion for a new trial was rejected by a judge who called his claims wildly conspiratorial. Visa, they're partnering with former Tether CEO Reeve Collins on his Wi-Fi network to enable customers to spend self-custody crypto. Canada, they're banning crypto ATMs. The UAE says it will leave OPEC and OPEC Plus effective May the 1st, potentially removing the quotas and increasing oil production. And Tom Lee, he's just bought 45,000 more ETH. Hope you enjoyed this one. Make sure you subscribe, follow us on Twitter, repost the clips, grow the channel. Have a good day. We'll see you tomorrow. Peace.